Ladies and gentlemen, good day and welcome to the Action Construction Equipment Limited Q3 FY23 earnings conference call hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing *0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Abhineet Anand from Emkay Global Financial Services. Thank you. Over to you, sir.
Thanks, Lizanne. Good afternoon, everyone. I would first like to thank the management of Action Construction Equipment for giving MK this opportunity to host this call. We have with us the senior management of Action Construction. We have Mr. Saurabh Agarwal, Executive Director, Mr. Rajan Luthra, CFO, and Mr. Vyom Agarwal, Head IR. I will hand it over to Saurabh, sir, for giving the opening remarks, post which we will open the floor for Q&A. Over to you, sir.
Yes, thank you. Good afternoon, everybody, and welcome to this earnings conference call for discussing the results for the quarter and 9 months ended 31st December 22. I take this opportunity to wish all of you a fabulous new year with good health and happiness. Along with me in today's earnings call, we have our CFO, Mr. Rajan Luthra, and our Head of Investor Relations, Mr. Vyom Agarwal. I hope that all of you have had an opportunity to look at the company's financial statement and the earnings presentation, which have been circulated and uploaded at the stock exchanges. Let me start with some of the recent business highlights. To strengthen our product portfolio and showcasing our technical products, the company has recently unveiled India's first indigenously designed and developed fully electric mobile crane with breakthrough technology and zero emissions. Expanding our presence in the heavy crane segment, we have also launched India's biggest indigenous crane with 180 tons lifting capacity and also showcased 35 tons 4x4 pick and carry crane, which is our biggest. With our focus on the export market and the defense sector, the company has also launched new range of telehandlers and also India's first series of aerial work platforms, also popularly called as AWPs, for the domestic market. This occasion of inauguration of all these new machines was based on Mr. Nitin Gadkari, Honorable Minister for Road Transport and Highways India, amongst a gathering of industry leaders, customers, business partners, and company delegates, to address the emerging needs and technology requirements with the backdrop of reducing carbon footprint of our end users. With these new launches, ACE marks India's first indigenously developed 100% electric construction and propels India's growth on the global platform of technological advancements. Further, to brief you on the financial performance of the third quarter of FY23, the operational revenue grew by 27% on a year-on-year basis to rupees 555 crores, with an EBITDA of rupees 67.67 crores, showcasing a growth of 58%. The EBITDA margins stood at 12.2%. The profit before tax stood at 10.9%, that is around 60.27 crores, and PAT margins were at 8.1%, around 45 crores. I'm delighted to share that these are our best ever quarterly revenue, EBITDA, PBT, PAT numbers ever. For the 9 months ended FY23, the operational revenue grew by 38% as compared to similar period of FY22 and stood at rupees 1545 crores with EBITDA of 166 crores, which is 49% growth on year-on-year basis. Our PBT grew by 57% to 146.33 crores. The PAT stood at 109 crores, which is 56% growth on year-on-year basis, and the EBITDA margins of 10.7% and net profit margin of 7.1% are also better as compared to last year's 9-month results. Now let me give you a sequential perspective. For the third quarter of FY23, the operational revenues grew by 13% on a quarter-on-quarter basis, with 150 basis points improvement in EBITDA margins. The PAT during the quarter increased by 25.4% on a quarter-on-quarter basis, and PBT and EBITDA numbers registered a growth of approximately 30% respectively. The company sustained its growth momentum across all operating segments during the quarter, driven by focus on customer centricity, execution, and agility in operations. In the crane segment during the quarter gone by, we reiterated our dominant market leadership position and registered revenue of 385 crores with margins of 13.5%. The construction equipment segment clocked revenue of 62.5 crores with EBITDA at 10.27%. The metal handling segment recorded revenue of 44.5 crores with margins at 15.65%. And Agri division registered revenue of 64 crores while maintaining margins at around 3.74%. While the construction equipment and crane divisions has led the growth, Agri has shown some signs of improvement with December quarter numbers sequentially better than September. With lower inflation, strong winter crop sowing, and signs of pickup in farm incomes, it is likely that the rural slowdown is bottoming out. Our consistent, strong, all-around performance is a testimony to our strategic clarity, strength of our brand, our capabilities, our execution skills, along with agility in running the business, and most importantly, the determination and passion of our talented, purpose-driven team members. On the operational side, the economic activity in India continued to gather momentum with sequential moderation in commodity inflation, even as core inflation remained elevated. All the major commodities still remain at an elevated level when compared to long-term averages. This is evident when you look at the inflation from medium-term perspective. Commodities such as mild steel, alloy steel, pig iron, aluminium, copper, rubber, etc. are seeing close to 50% inflation when compared to pre-COVID levels. To summarize, commodity inflation seems to have peaked and is moderating from its unprecedented level, and that augurs well for our industry. We remain focused to deliver on our growth agenda, growth that is consistent, competitive, and profitable. We will try and continue to manage the delicate balance of ensuring competitiveness of our products and keeping our margin profile in a healthy range. Looking ahead, we would like to reiterate our previous guidance and expect a growth of 28 to 30% in the crane segment, 25 to 30% in the crane segment for the current year, and a 30 to 35% growth in the construction equipment segment. Material handling and agri segments are expected to grow at around 10 and 15% respectively during this year. On the whole, we are looking at least a 28 to 30% increase in our top line for the current year, with expansion in EBITDA margins as compared to last year. Further, our Honorable Finance Minister has presented the Union Budget, which lays down 7 priority areas: Sapkrishi, that is inclusive development, Sabka Saath, Sabka Vikas, reaching out to the last mile, infrastructure and investment, unleashing the potential, green growth, youth power, and finally, very importantly, boost to the financial sector. The budget sets out realistic and inclusive vision for the nation and is in line with the vision of our Prime Minister to make India Atmanirbhar while giving a boost to Make in India concept. Capital expenditure outlay will be stepped up by 33% for the third year in a row to rupees 10 lakh crores in 23-24. Also, the effective capital expenditure of the central government is estimated at 13.7 lakh crores, which is equivalent to 4.5% of our GDP. Allocation towards capital expenditure and infrastructure layout, including the setting up of new infrastructure finance secretariat, will enhance opportunities for private investments in sectors like railways, roads, urban infra and power. Global manufacturers are looking beyond China. With our Prime Minister Narendra Modi stepping up to seize the moment, we believe that India will be a big beneficiary as companies move forward towards China Plus One strategy. This, along with the PLI initiative, has been helping to revive the industrial capex cycle, thereby spurring private capex. This makes us believe that the demand scenario should be further strengthened and will continue to provide strong growth momentum to our company in the medium to long term. With this, I would like to open the call for question and answer session. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parag Thakkar from Annual Wealth. Please go ahead.
Yeah, congratulations on great set of numbers and guidance. I wanted to just understand what is the breakup of our crane business. So how much comes from real estate, how much comes from industrial capex, how much comes from railways or refineries, I don't know. So just wanted a segmental breakup in the cranes business.
Yeah, thank you. I don't think we have a segmental, analysis available offhand with respect to the end user segment. But broadly, we can tell you that within the cranes, about 10-12% comes from the real estate side.
Okay.
And let's say the balance, about 45% and 45% approximately, would come from infra and manufacturing. But cranes are used not only for infrastructure and construction at large, but also within, for manufacturing, for lifting, shifting goods within the factories, for logistics. About 10% would be approximately real estate. About 45% plus minus with respect to infra, and 45-50% plus minus with respect to
manufacturing.
Yeah.
Yeah, manufacturing includes refineries, it includes various things, right?
Everything, right from the biggest like refineries, cement plants, steel plants, and obviously going down to the smallest of the factories and industrial areas. A lot of our cranes even in the industrial areas for loading, moving, lifting, shifting.
Correct. And so how does your industry order book work? So for example, when you are guiding for 25 to 30% revenue growth and EBITDA margin improvement, you are guiding for is what, 150 bits?
See, on a whole year basis, I think last year we did close to 10%, and this year we had projected 10.5, 11%. So hopefully we should be around 11% this year.
Okay, 11% for next year, right? FY24.
No, sorry, FY23.
FY23 will be 11%. FY24 will be 13%. You said, no?
Yes, should be somewhere between 12 to 13%. That will unfold over the next years.
Yeah, correct. And 25 to 30% growth is for FY24, right? Over FY23.
FY23. We're talking about the current year, 28 to 30% growth. For the next year, we are looking at about 15 to 20% growth at least. And maybe once we have a call with this, with the final this thing, we will be able to put a precise percentage to it.
Yeah. Correct. So basically, you have an order book kind of situation where you can predict the revenues for next year.
Not really. See, in our industry, people want to order and take their deliveries as soon as possible, generally ex-stock, but generally people don't wait more than 1 or 2 months. The general momentum and our plan and understanding of the industry also coupled with our products, new ranges, what we feel will further increase, for example, like construction equipment or metal handling and let's say tower crane industry. So that's how we're able to predict what additional incremental we'll be able to do.
Correct. So within construction equipment space, we compete with players like JCB and all?
Yes. For our backhoe loaders, we compete with JCB. They are much bigger than us, much bigger than us. But yes, slowly.
So what should be our market share in that JCB segment?
Currently, I can say that our market share there is about close to a little over 3%.
Oh, just 3%. Oh, okay.
But it's going to move very fast now.
Okay. And your manufacturing capacities are fungible, right? So you can make construction equipment also in the same plant, and you can make cranes also in the same this thing. So suppose if demand for construction equipment where you compete with JCB, that increases significantly.
Yes. See, it is not 100% fungible, but pretty well fungible, especially at the fabrication side. So yes, going up in something and going down is possible for us with great flexibility. Yes.
And what will be the current year capacity utilization in FY23?
See, as of now, if I talk of the last quarter, on a company basis, we are working at close to 68-70% utilization.
Okay.
But if we talk of cranes, we are above 75%. If we talk of construction equipment, we are at 50%. If we talk of metal handling, we are about 65%.
Oh, construction equipment, you are only at 50%?
Yes, as of now.
Okay. So what will be the capex for the what was the capex for 23 and what is the capex for 24?
See, our plan for the current year, which is ongoing, the exact number I'm sure Mr. Luthra will provide, but we are setting up a new manufacturing facility for making bigger cranes, so spending close to about 35 crores here.
Okay.
So this will enhance our capability to produce more numbers of bigger cranes, and now that we are also launching bigger models. Apart from that, we are also initiated capex with respect to our regular crane production, wherein we want to increase our capacity by 40-50%. So that will start to take shape in this quarter, and hopefully we want to operationalize that by Q2 of next year, FY24. So that will again be to the tune of 35 to 40 crores.
So what is the asset turn generally? If you put up 35 crores, what is the revenue you expect at say 70% utilization?
See, 35, let's say 40 crores can give us peak revenue addition of 700-800 crores. So at 70%, you can do 500-600 crores.
With 10, 11, 12% margin.
More than that, sir. In cranes, we are currently doing 13%, and as
so I'm saying break even in within a year.
Yes. We should be able to recover that money in 1 full year of operation.
Wow. And you have got net cash of 300 crores, no? Right now?
Approximately 290, 300, yes.
So what should be the dividend payout one can expect?
It's for the board to decide, but I'm sure going forward it is going to increase.
Okay. That's it from my side. Thanks a lot, sir. Thanks a lot. Yeah.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is on the line of Akshay Kotari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity. So, any update on the acquisition which we had planned, which I think went into the IBC, that company?
Yes, we have already submitted our resolution plan to the resolution professionals, and things are seem to be moving in the right direction. So, hopefully, we should have some news over the next 2-3 months, Mr. Luthra, maybe faster than that.
Like in the next quarter. We're coming in by March end.
By March end. So maybe by end of this quarter or early next quarter, something should materialize, hopefully.
Okay. And sir, update on Ghana project. Have we received that Exim Bank advance which we were waiting?
Yes, we are still waiting for it. It is just around the corner. That is the confirmation we have. So we were actually planning and are geared up to start execution in Q4 this year. But I think that will delay to Q1 next year when we start execution.
Okay. And sir, I just wanted to understand the incremental growth, the opportunity which we are seeing. Working capital would be essentially funded by borrowings only? Because I think you have
some... And I would say also very efficient management. For the last 2.5 years, we had let our inventories bloat up. And I'm very, very happy to tell you that in the last quarter, we started controlling our inventories, and at the end of last financial year, our inventory days were at 104, and now they have gone to 89. Our receivables are at 40 days, now they're at 30 days at the end of the quarter. And if you look at our creditor days, they are nearly similar at 105. They were earlier 103 now. So on the whole, from 39 days, if you calculate our working capital, 39 days, which was at the end of the financial year, and if you talk of December quarter, we have gone down to 17 days, and we were targeting 25-30 days. So we've been able to do a wonderful job in the last 2-3 months. And going forward, I think we should be in a position to easily stabilize this around 20-25 days. So our working capital required is 20-25 days. So that means our requirement to run the business is not very high, and whatever it is, we'll manage from internal accruals. That's our aim.
So, but during September quarter...
Mr. Kotari, so may we request that you return to the question queue? There are participants waiting for their turn.
Yeah, okay.
Thank you. The next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Congratulations on great set of numbers, and the effort which we have given in last few years is showing up, okay. And being able to maintain the market share is great, okay, in the cranes business.
So we will increase it, sir.
I wish so. As an investor, I wish so.
So, all across, all segments.
Yeah.
We are very confident.
Okay. So first question was, in last few years, we have increased our basket of equipment, okay, both in cranes and construction machinery, okay. What is the opportunity to cross-sell? See, this question I am asking because I was doing some rural visits, okay. What I found, people who do equipment rental business now have generally both cranes and construction machinery, okay. So that means backhoe loaders. So how focused are we in selling our backhoe loaders with our existing crane customers who rent the equipment out? And what measures have we taken so that we can cross-sell and increase our basket of products to the existing customers of ours? So this is the first question.
See, to answer your question, about 50% of cross-selling is possible, especially crane team doing the backhoe loader team. And we use that definitely. But to be very frank with you, currently to the level of 10-20%, because what happens, cranes, even their last 27 years, we are established, we are leaders, we are number one. So, you know, it is very easy for any person to sell, to be able to convince and get the orders and execute. Backhoe loader, because we are a comparatively smaller player, is a slightly tougher task. So we have a separate set of people also doing that, who are supported by the crane people, and going forward with our numbers which have started to increase now. And sales में एक बड़ी typical चीज होती है, जितना दिखता है उतना बिकता है. तो अभी दिखना शुरू हो गया है, and I'm sure over the next 1 or 2 years और ज़्यादा दिखेगा. So eventually it will come to a level that is 50% cross sell or common market which is available. About 20, 30, 35% of that we'll be able to attack, where we are currently working at 10% level.
And a second question is, we hear a lot of progress happening on warehouses, okay, and capacity utilization improving at manufacturing and new manufacturing facilities also coming up. But on our material handling, the sales is stagnating, okay. So what is the reason for that, and what are we doing to increase our market share on the forklifts and all those equipment, okay, material handling equipment especially?
Unfortunately, Q1 and Q2, we did suffer a little on our numbers. It's more to do with our internal problems with respect to supply chain and manufacturing. And we were not able to significantly increase our numbers, and that's why, you know, even if you see in this quarter, on a yearly basis, we've increased our numbers only by 3%. But yes, definitely quarter on quarter, we've increased by about 25%.
One last question, then I'll join back in the queue. Can you give an idea of applications of this 180 tons crane what we have launched, and size of the market and how fast is it growing?
Yeah, I'll just finish the first answer regarding metal handling. Yes, so for some good bad reason, we're not able to increase our market share and our numbers in the first half of this year. But I'm sure within Q4 and especially in the next year, we will surprise everybody very pleasantly on account of metal handling. Because all the, you know, orientation and alignments with respect to ensuring a good product in good numbers is in place. And I think metal handling should grow faster definitely next year, even in Q4. Regarding the 180-ton crawler crane, which is a new introduction, we've shown our first machine at an exhibition and got inaugurated also. We expect to commercialize this by June, July. So hopefully Q2 onward, we start selling this bigger model of crane. And at that time, you know, maybe another 100-ton crane, which was under development, that should also be in our kitty. So we'll have the entire range of crawler cranes, right from 40, 45 tons, 55 tons, 75 ton, 80 ton, 100 ton, 160 or 180 ton. So by June, July, you know, with the commencement of our new plant, which we were talking about, for bigger cranes, I think we'll start these 180 ton cranes as well.
The applications and size of the market?
The size of the market and?
Applications of these cranes.
Again, bigger plants, refineries, cement plants, infrastructure projects, bridges, flyovers, bullet trains, windmills, you know, anything heavy, any 50, 70, 80 ton load that comes to your mind is handled by such cranes. Average price of such a crane would be close to about 3.5 crores. And currently, the annual size in Indian market is close to about 70-80 such trains every year.
Okay. Thank you. I'll join back in the queue for further queries.
Yeah. Thank you.
Thank you. The next question is from the line of Surat Devra from Paladin Capital. Please go ahead.
Yeah, hi. This has been a great quarter. Congratulations to you and the entire team, sir. I had a question on the construction equipment side. So I was just pulling up the numbers over the last 2 years, and the realizations seem to fluctuate a lot. So I think in quarter 4 of FY22, the average realization was about 45 lakhs. This year, the first half, it was about 35, 37 lakhs. And this quarter gone by, quarter 3, the realization is 30 lakhs. Could you help explain this? And also in line with this, how to think about the margins? Because despite the realization going down, the margins have gone up. So what does this segment look like going forward in terms of realization, volume, margins? Thanks.
This segment for us, the biggest product by numbers is backhoe loaders, followed by the soil compactors and motor graders, and then eventually piling rigs. So backhoe loader, an average price is close to about 23-24 lakhs. A soil compactor, again, road rollers is similar, road vibratory rollers. A motor grader is close to about 65-70 lakhs, and a piling rig is close to about 2 crores. So that is why the variation you are seeing. So if you end up selling 2, 3, 4 extra piling rigs, which is 2 crore each, the number seems to be higher or lower. And it is dynamic. So certain things we really can't control. But I would believe that backhoe loader being one of the main risking, and going forward, motor grader also contributing in a significant way. The average price realization will stay in the range of 25 to 30 lakhs. A little bit, I would say 30 lakhs plus minus. And yes, if you notice in our current quarter, we have actually, I always used to say that once we start doing more than 200 crores worth of construction equipment, our profitability will go into double digits. And we have done 62 crores of revenue in the last quarter, and our EBIT level is at 10.27. So going forward, I believe that once we are doing 225, let's say in this year itself, we could be doing a 230, 240 crores, and going forward, once we're doing 300, 350 crores. So even the profitability will align totally with respect to our, similar to our cranes business, I would say. Maybe a point here, 100 points here and there. And the going will be good. And like I said, जितना दिखता है उसका बिकता है, तो बिकना शुरू हो गया. It's just we have to press the accelerator.
Thank you. And my second question was that you mentioned in your opening comments that the government itself is looking at a capex increase of 33%. So given that you are guiding 20% growth in FY24, is there a reason for the difference?
I'm being very conservative.
All right. Okay. Thank you.
Keep on upgrading it as the quarters pass by.
Yeah. Thank you. Thank you very much.
I don't want to say 35% and end up doing 25% and still be on the bad side.
Yeah, I was expecting that. I just wanted to make sure.
Yeah.
Okay. Thanks.
Yeah.
Thank you. The next question is from the line of Gaurav Gandhi, Glory Tail Capital Management. Please go ahead.
Hello, sir. Congratulations on the great set of numbers. It's great that the company has launched the electric crane, and it's really appreciable. But my question was regarding whether they are equal in strength with the existing cranes which run on the oil, and given the charging infrastructure is not that well in the country yet, is it make really the viable option for the players to buy that?
The electric crane. So I'll talk on two things, viability and the electric charging infrastructure separately. Generally, electric machines and things come at 2.5 to 3 times the cost, but we've been able to come out with a crane at about 70-80% higher cost than a current similar crane 15 ton. And as per our calculations, the viability payback is in for extra money invested by the customer or a retail hirer is about 2.5 years. And after that, for 1.5, 2 years, at this time we have to replace the battery. He's still, that earning is free. So he's saving an additional 15-20 lakhs on account of fuel in the last 2 years out of the 4-year life cycle of the battery. First. So we believe that it is going to be, and most importantly, especially for retail hirers, they, the operators and all, diesel, filtrage, everything happens. All that will also finish. And for the bigger companies, everybody wants to be environmentally friendly.
All right.
Already the first proto machine which we had displayed, one of the main contractors at Tata Steel, he wants to take it straight away. We said, no, wait for 2-3 months before we launch it commercially.
Okay.
Already companies like Reliance or L&T or Tata or X number of people who've seen it already are already very much interested. So that's the viability side of it.
All right, that's great. The second question is that in last conference call you mentioned that you have received the export order, big export order.
Let me answer regarding the charging that you were asking about.
Yeah.
This machine comes with an onboard charger. So all you need to do is a 220 or a 440 kilowatt power point needs to be available, and this machine can charge itself anywhere.
All right. But whether such charging points will be available in the area where this crane works, maybe, if something is happening at the construction is happening of the bullet train, let's say, whether such kind of power will be available out there too.
Let's forget the bullet train, but because you mentioned bullet train, the site is working. They have electricity power and DG sets giving them 220 or 440 supply already. That is how the things are happening there. So there is no infra site where power is not available, or there is no factory where power is not available. And if you talk of retail hirers or the hiring segment, in their offices, shops, yards, everybody has power.
Right.
And we are using the same power with the onboard chargers. Problem is cars and other things do not have an onboard charger. That's why they need a charger.
Okay.
They have an onboard charger. So you just have to connect electricity. It is much simpler, much easier.
All right. The second question is regarding, in last conference call you mentioned that you have received some big export order, the result of which will start giving from quarter 3 and quarter 4. So given that the current increased sale of cranes, will it be sustainable, or is it related to that export order only?
Yes, there has been some contribution in the, let's say, cranes and in the construction equipment sector. It is very much sustainable. Rather, it is only going to become 2-3 times of this, the projections that we have from our distributors and partners. And also, apart from that, we have received a good significant order from Namibia for tractors. So some execution this quarter, but most of it in the next year. So, and like I said, we wanted export to be 10-15% of our portfolio. This year we'll close more than 6%, maybe 120-130 crores, maybe slightly higher. And going forward, I believe that next year we will hit our 10% planned target with respect to export.
All right, sir. Thank you very much. Thank you.
Thank you. The next question is from the line of Dinesh Kothari from HDFC Securities. Please go ahead.
Hello, sir. Congratulations for having good set of numbers to your entire team, you and your entire team. Sir, I just wanted to know about, you mentioned about that we are still awaiting the letter of credit from the Exim Bank, and you are hoping it to get received by Q1. So what is the revenue that we can expect in the next financial year from that project of $25 million approximately?
We are expecting it within this quarter. So quarter 1 execution should start. So out of the total approximately 200 crores, I would believe at least 50-60%, if not more, we should be able to invoice and consider in revenue in the next year.
Okay, sir. And second question was about we are receiving some of the pilot projects and orders from the defense sector as well. So do we have any defense order book number that we are currently serving and catering to the?
Yes, see, as of now, we are executing that special multi-purpose MPT machine. And Luthra, what we have done about half of it?
Yeah. Half of it.
So let's say that was about 500 odd units plus minus, and we've executed half of it. So balance will be done in the next year. And apart from that, the smaller MR, SAM, medium range surface missile cranes orders under execution, and especially slightly bigger cranes for handling. So the exact number we don't have handy. If you could just drop us a mail or something, we'll provide you the exact details.
Sure, sir. And just a small question on the agricultural segment part. So, upon the last quarter, we have improved on the agri margins, but they are not sufficient as we are doing in other segments. So, how are we looking forward to that in coming quarters?
We are struggling a little in our agri segment for some time now, but things are changing. You can also see some improvement, and inflation and commodity price, coupled with our pricing power with respect to agri, really troubled us in the last 1-2 years. But going forward, things seem to have stabilized a little now. Our numbers are also improving. So I'm sure this quarter 4 and quarter 1 numbers, quarter 4 FY23 and quarter 1 numbers, you will see significant improvement. And we are hopeful that in the next financial year, with our numbers also increasing and pricing stabilizing with respect to input costs, we should do a 10% EBIT level there even in the agri segment on a slightly increased revenue. Another thing is that, just like construction equipment in agri again, as we start to do upwards of 250-300 crores of revenue, that means 70-75 crores on a quarterly basis. The operating leverage and the utilization levels will help us, reach our 8-10% EBITDA levels. So hopefully we are on track, and next year we should be able to see this.
Right, sir. That is helpful. And if you can please share the number of the utilization that we are having currently in the agricultural equipment segment, and is that fungible or not?
Sorry to interrupt, sir. We're not able to hear you clearly, Mr. Kothari.
Hello. Am I audible now?
Yes.
Yeah. So if you can please share the number of utilization rate we are currently having in the agricultural equipment segment, and whether that capacity is fungible for other manufacturing units or not.
Our current utilization with agri segment is close to 45%. And this is not fungible with others, except for that, yes, some engines and transmissions which we do in our transmission plant is definitely fungible. But the end product facility is definitely not fungible, and we are currently utilizing 45% in agri. And we expect that next year this will also go to 60-65% at least.
Fine, sir. That is all from my side. All the best for upcoming quarters.
Thank you.
Thank you. The next question is on the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good evening, sir, and thank you so much for taking my question. So, congratulations on a great set of numbers. So most of my questions have been answered. So I would just like to ask a bit more on the capex side. So we are doing around 70 crores capex by next year, correct, sir? So that capex should be online by Q2 FY24, correct?
Yes.
And so we can expect around the revenue of rupees 700 crores from the 70 crores capex, and that utilization could happen. How much time would it take to, reach a certain level of utilization where we can expect the revenue to reach our peak revenue?
There are two capex we are doing with 75 crores. So one is about 35 crores, one is about 40 crores.
Okay.
This 35 crores of capex in bigger cranes will give us a capacity of around 300-400 crores. And we should be able to utilize that in FY25-26 in totality. FY24 we will use 30, 40, 50%, but FY25 and FY26 over the next 2-3 years. So this is about 300-400 crores. And the other capex 40 crores, we were expanding our current capacity of our existing cranes by about 40-50% by investing about 40 crores in plant and machinery. That will also become upstream by quarter 2, and we should be able to utilize some of it in this year if the demand is to that tune. But I'm sure by FY25-26 again that we should be able to use, and that will give us revenue availability or utilization availability of close to 700-800 crores. So 700-800 crores plus 300-400 crores is 1,000-1,200 crores is capacity addition. We are doing that, spending this 75 crores. First. Second thing, what is also happening simultaneously is that in one of these capex, we are setting up a new facility within our existing premises, within our existing land. So it will further free up, locations for forklift and tower cranes. So there again, we expect 50% increase in capacity. So let's say about 150 crores of forklift utilization possibility and another 150 crores of tower crane utilization possibility. So all in all, this will help us to do maybe 1,200 to 1,400 crores of revenue.
Oh, okay, so that helps me a lot, sir. And all of these, our additions would be margin accretive, correct, sir?
Yes, yes.
Yes. So our just current Q3 margins are on a sustainable, and we'd be, just seeing additional growth. We don't have any seasonality per se, right, in the business?
We do not have what? I didn't get you. You'll have to be a little bit clearer, please.
So sorry, sir. Am I audible right now?
Yeah.
Yeah, sorry, sir. I just wanted to ask, we don't have any seasonality per se, right, sir, in our business. Our margins will, with our new revenue will be keep on growing quarter on quarter, or is there some element of seasonality in our business?
There's definitely an element. Generally, quarter one is definitely slower than quarter four. And quarter two is definitely better than quarter one, but still on the slower side. The second half picks up very fast, quarter three and quarter four. So if you look traditionally, we do about 40 to 45% of our revenue in quarter one, and 55 to 60% of our revenue in first half. 40-45% in the first half, and 55 to 60% in the second half. And accordingly, the margins, when the revenue is slightly not so great, do not rush up in the first half, but they start to improve in the second half. So that seasonality is there a little bit, first half and second half.
Okay, so thank you so much, sir. That helps me a lot. All the best for your result. Looking forward to great numbers.
Yeah, thank you.
Thank you. The next question is from the line of Hiten Borocha from Jointer Capital. Please go ahead.
Hello. Thank you for the opportunity, sir. So most of the questions have been answered. Just a follow-up question on this CapEx. You mentioned we are doing 35 crore CapEx with these bigger cranes, 180 tons. And the balance 40 crores we are doing it, I didn't get that. Where are we spending this 40 crores?
So this is again to increase our capacity for smaller cranes, which is our bread and butter product, to increase our capacity by 40-50%. So our existing plants are being, their size and shape and form is being increased to accommodate to do more business, fabrication as well as assembly.
Okay. So by any chance you can provide like what number of cranes we can produce per year or anything like that?
Yes. With respect to our pick and carry cranes or mobile cranes, currently our capacity is about 8,000 to 8,500. And post this expansion, it will go to 12,000 plus.
Okay.
And for the crawler cranes, our current capacity is about 40 units approximately.
Sorry, sir, didn't got you. What? Sorry, hello?
The crawler cranes and the truck cranes, our current capacity is about 40 units per annum. This will go to 200 plus per annum.
200 plus. Okay.
And simultaneously, after doing these things, our capacity, we can currently produce 175 forklifts. That will go up to around, somewhere around 275 per month.
Okay.
Our tower cranes, which we can currently do about 30-35 in a month, that will also go to 50 units per month. So I'll put it in the annual perspective. It will be easier for you. The forklifts currently from about 2,000, the capacity that we will go to around 3,300 annually.
Okay.
And for tower cranes, our capacity of currently around 350, that will go to 550, 600 annually.
Okay. Okay. And everything?
Utilization revenue may be close to about anywhere between 1,200 to 1,400 crores, slightly fungible, maybe even 1,500 crores.
Oh, okay. So any of this capex has already been spent, or is it going to start from Q1 itself?
We have already spent, I think we would have spent close to 40% of it, approximately 40-45%.
Okay. And balance will be spending in next 6 to 8 months. Okay, sir, yeah.
We'll make it operational by quarter 2 positively.
Okay, and everything will be start generating revenue from Q2 next year, right?
Yeah, we are trying the bigger crane facility to operationalize that in Q1, but definitely by Q2, yes.
Okay. That's all, sir. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hello. Sir, first is a bookkeeping question. Can you give the exports for Q3 and the 9 months?
Export numbers for Q3 and 9 months. Just a second. I think I have the revenue. For 9 months, we have exported about 74 crores.
74 crores.
Yeah, and Q3 we have done about 50 crores.
50.
Yeah.
Oh, okay. Okay. And if you could share some insights on which country is this? I was looking at some data. It was Tanzania, some of the African and Asian countries. So what is driving this? And
about 25 to 30 all over the world, including our immediate neighbors like even Nepal, Bangladesh. We were doing to Afghanistan, but yeah, that has reduced quite a lot in the last 2 years. But apart from that, we are doing in Southeast Asia, some in the Middle East Asia, in 6, 7, 8 countries within African continent, where there is potential. And recently we have started Turkey, and in the last 6, 8 months we have also gone into the South American continent, especially focused on Brazil and Argentina, some in Mexico, and some as well as in CIS countries, including Russia.
What is driving this? Because we are already seeing significant growth. Is it do the markets don't have the established players there? Is it a relatively new market for everyone?
They have everything, and they are already buying something and utilizing. We are driving it. We are trying to foray into these markets, offer equally good products, maybe more lucrative, maybe more cost effective. We are trying to export. Till 2, 3 years back, we were not trying to export our machines in any organized fashion. So the machines which are technically similar and acceptable abroad, for example, forklifts and especially backhoe loader and tractors. So our export team, our export division is driving this.
Okay, and will there be 10%, 20%?
Mr. Kumar, sir, may we request that you return to the question queue?
Okay.
Thank you. The next question is on the line of Gunjan Kabra from Niveshaay. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations for the good set of numbers. So, I wanted to understand you mentioned that manufacturing sector in cranes contribute to around 50% of the revenue. So, where real estate and infrastructure is quite clear, but in manufacturing, which sectors majorly contributes to our revenue?
Somehow your voice was not very audible.
So is it audible now?
Slightly better, yes.
Yeah. Just a second.
I'm so sorry, but let's say within cranes, I discussed that I've not been able to understand your question, but a little part of it. Vyom, if you have been able to understand, I don't know.
No, sir, there was a lot of echo from our side.
Yeah. So, but let's say within our crane segment, which is 70% of our revenue, 10% approximately goes into real estate, 45% goes hardcore into infrastructure related activities of any type, and about 45-50% goes into manufacturing within the crane segment.
So I wanted to know in the manufacturing sector, which sector contributes to the major revenue is what I wanted to understand.
The steel sector, ma'am, because finally cranes are built to handle heavy goods, and all heavy goods are made of steel. So right from the scheme of things of steel, whether it is let's say an iron ore mining to factories which are producing sponge iron or going into the final product, billets or plates, because at every stage steel needs handling. And then from the bigger factories or the, let's say, Steel Authority of India or Tata Steel or whichever JSW, they go to the yards, there again handling is happening, loading and unloading, then they move to the traders, then they go to the end users who create some component out of it or some fabrication. Then finally it is installed somewhere. So in the entire cycle, cranes are used for heavy goods and directly, indirectly steel sector. Mainly, apart from everything else which is heavy.
Okay. Sir, I'll get back to the queue and see the network.
Thank you. The next question is from the line of Akshay Kotari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity again. So I attended one of the webinars on construction equipment industry, and one thing which came out was half of the construction equipment industry is backhoe loaders. So, first of all, is it really like that?
I would say 1/3, a little more than 1/3 maybe. Maybe around 35-40% is backhoe loaders, yes, construction equipment.
Also, one thing also came out कि backhoe loaders utility value compared to other construction equipment is much more, and it's a very useful machine. So
yes,
is it like
machine? Yes.
Yeah, it's a multi-purpose machine. So is it somehow marching in the share of cranes as a total percentage of construction equipment, or cranes would always have that utility?
Cranes are totally different. See, backhoe loader is basically a machine which has loader in the front end and excavation in the rear end. So, and it is used for loose aggregate. Loose aggregate when I say is कि जैसे sand हो गई, मिट्टी हो गई, पत्थर हो गए, और let's say in a tile shop, let's say a tile factory, उनके जो लूज एग्रीगेट्स होते हैं, जिप्सम हो गया, ये हो गया, तो जहाँ भी लूज बरूदा टाइप आइटम है वहाँ बैकहो लोडर यूज होता है, या अगर अर्थ वर्क करना है. Cranes are used for solid goods, so they can never compete with each other.
Okay. And sir, I would just like to add a little bit. Cranes are used wherever there is lifting and shifting.
Yes.
Whereas backhoe is basically for digging. So wherever you can visualize and digging and earth handling, that is where you have a backhoe. Wherever you can visualize a lifting and a shifting, there you would need a crane. So they are two totally different applications to each other. And, they are kind of complementary rather than, supplementing each other. Yeah.
Okay, understood. Last question from my side would be, sir, then are we also having any pipeline to develop electric backhoe loaders, just like what we did in cranes, because that would be something remarkable?
So I think we can easily develop an electric backhoe loader, but it will not be commercially viable, because what happens in cranes, we can afford to have the battery weight. We already need some counterweight. But in a backhoe loader, if we add 1 or 2.5 tons of battery weight, the self-weight of the machine goes up, and the characteristics of the machine changes, and even the battery consumption and power consumption, and cost versus saving. It is easy to develop a machine. But I feel that in backhoe loader segment, it might not be that viable. With respect to backhoe loader and going forward, maybe in the next 2, 3, 4 years, even in the crane segment, the more viable option would be hydrogen fuel cell technology, which will help us eliminate, especially for a backhoe loader or any other machine, which does not require a counterweight. It will make more sense to go in with hydrogen technology, hydrogen IC engines, hydrogen fuel cells.
Okay, understood. Thanks a lot, and all the best. Yeah.
Thank you. The next question is on the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. See, out of the 200 sales of construction equipment, what would be the number of backhoe loaders in this quarter?
Out of our construction equipment, the numbers for backhoe loader in this quarter, what is the number of backhoe loaders in this quarter? 184.
It is 184, you said?
Yeah.
And last year, how much was it in the same quarter?
Last year in the same quarter, it was 144.
Okay. And one more thing. As more and more we grow, what percentage of our revenues are currently from spares and services in this quarter and 9 months? And how are those numbers moving?
Luthra sir, spare parts revenue to our revenue is how much?
In 9 months, we have done about 68 crore rupees.
So 68 divided by...
and in the current, we have done 27 crore rupees. As compared to last corresponding quarter, 19 crores.
About 4-5% of our revenue is coming from spare parts.
Yeah, that's right.
See, one question I have. This business is cyclic, okay? Currently, the penetration of these equipment is very less, okay? But over next 5 years, 6 years, when the penetration becomes very high, we find most construction equipments have to go for I would say, spares and services to keep their vendors happy, and also for their own profitability, okay, once the penetration increases of these equipment.
Yes.
So how are we focusing on, because if we are not focusing in this period of time when the times are good, okay, on this, and when people are ready to shell some money out, in tough times trying to convince people to do a factory renewables or factory spares and services becomes much more tougher, okay? And being in a cyclical business, this will play an important role for a longer term sustainability of our numbers, our vendors, okay? So how are you thinking now, okay? I mean, some thoughts on that?
We have a very well spread out network for spare parts and service. And as a matter of fact, for any construction equipment or a crane, mobile crane, for any manufacturer, it is imperative to have good availability of spare parts as well as service close to the locations where these machines are working. And that is what we've been able to do in India. We have spare parts from more than 100 locations available within the country. And in the last 1.5 years, I would say, 1.5 years, we have also put our system on a automated DMS, wherein spare parts availability and ordering with respect to our stock locations is everything is on Oracle, on our dealer management system. So I think that task we very well understand, because the success of any equipment is totally based on the availability of spare parts. Finally, it's a machine. Something will go wrong. It will require maintenance parts. It will require everything. So that is a very, very key aspect with respect to our industry, and we are doing whatever best is required to cater to that. And cyclical thing you were talking about, yes, our business that way is cyclical because it depends on the economy, it depends on infrastructure spend, it depends on manufacturing sector doing good, and to overcome this aspect. That's what we principally decided 2-3 years back, that 5-10% of our portfolio, our revenue should come from defense, another 10-15% from exports, to be able to generate some counter-cyclability in our business if the macros go wrong in the country. So we are very much focused here as well.
See, when we have a target of growing our market share in across the businesses, okay, are we also having a team whose target is to take this aftermarket spare services to something, let's say 10-12% of our revenue, at least in double digits? Or
we have created a similar structure within our company only in the last 5-6 months to take back business into the mainstream from the aftermarket with respect to spare parts. And we have very actively started working on this aspect in the last 2-3 quarters. So hopefully going forward, the spares revenue contribution will increase a little.
Okay, and lastly, we had an aim of... Okay, thank you.
Thank you. Ladies and gentlemen, we would request you to restrict your questions to one per participant only. We'll take the next question from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hello. So just one follow-up on exports. So do we sell directly globally, or is it through a set of distributors? And if you said that our products will be lucrative or cheaper compared to global players, so shouldn't this be a bigger opportunity for us going forward, the exports, please?
Yes. What you are saying is precisely true. And I'm mentioning our target as 10-15%. That was our initial target. But I think going forward, over the next 2 years, 5 years, 10 years, the potential is enormous for us to make in India and, the things that even our country is making for the world. And for the first time, we started moving in that direction. So the potential is enormous. There can be a time, 5 to 10 years from now, where we say that okay, we do X revenue, but we are doing 30, 40, 50% in exports. That is a possibility, and we're working very hard in that direction. And to attain that, in the last 6 months, we are working very actively now on all our products, upgradation, and I feel that within calendar year 23, most of our products would be very much export worthy and comparable to the European look, feel, fit, finish, quality also standards. And we are working very actively in that direction. And let's just hope and pray that results follow. That was the second part of your question. What was the first part of your question? I forgot my answer.
Do we sell directly or through distributors or to any other partners?
We sell through dealers and distributors because, see, like I said, machines need parts and service. So we just do not want to sell, some, odd units and then the customer gets doubled after 1 or 2 or 3 years. But yes, in saying that, some units do get exported directly to countries which are not represented through a distributor or a dealer. And we try to ensure that we provide them adequate spare parts, along with the supply of the machine.
In that case, are we building this network of dealers and distributors, increasing it year on year?
Yes, we are today operating out of 25 countries, and more than that, exact number is not handy. And potential by potential, we are opening up markets. Like I mentioned in the last year, 3, 4 critical markets, 4, 5 which we opened. One was Turkey. In the current year, Turkey, Argentina, Brazil, Mexico, and even Ukraine. You'll be surprised when the first missile landed there, the first containers of our machines were at the port last year. And even Russia, we have. Apart from, I'm sure, some other smaller markets.
Okay. And finally on wind.
Mr. Kumar, so may we request that you return to the question queue?
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Vipin Taneja, an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yes.
Yeah, my greetings to you on fabulous results, sir. And sir, just you mentioned about the defense sector, sir, and reading about all this MSRM and Akash missile program, I think they'll be mounted on your truck cranes only. So can we see by 2027, 28, like defense itself going towards 1,000 crore rupee revenue? Because the opportunity says so. Are we gunning forward for that kind of sales growth?
See, it's very difficult to put a number to it, but what you are saying is possible. Maybe not 1,000, maybe 700, 800. It's very difficult to put a number to it. But, anything is possible. And another thing that our government is focused, earlier they were also importing trains at 2 times, 3 times the cost, to suffice for such requirements. Just giving an example, we are supplying some special trains again to the Navy, which will be executed we received this order about 3-4 months back, which will be executed in the next year. That alone is about 35-40 crores. We'll finish it in 2-3 months. So things are happening. Now, whether it is 100 crores, 200 crores of cranes or 800,000 crores, that time will tell. I really can't put a number to it, but yes, thinking on it, I think 300, 400 crores looks easily doable, the type of pipeline that we see.
And what are the margin differential versus, the normal market and defense market?
Margins, from the bottom of our heart, we are Indian and we want to work for our defense forces. So we are not overcharging or anything. I mean, it's just sustenance.
And
that's our intention to serve the defense. I'll be very frank on it.
Okay. And sir, I've got a couple of more questions. I have 2 more questions if you can permit me, sir.
Sorry to interrupt, sir, but there are participants waiting for their turn. We would request you to return to the queue. Thank you. The next question is from the line of Pranay Khandelwal from Alpha Invesco. Please go ahead.
Hello. Thanks for the opportunity. Sir, can you just give us some insights on the present landscape in maybe mining, construction and roads sectors?
Yeah. So mining, construction and road sector, what do you want to know? I couldn't figure out the question.
Can you give us a landscape of what kind of demand we can expect from
these? I think the demand is very robust all across. And, with respect to end user segments, whether it is manufacturing, whether it is mining, whether it is infrastructure, whether it is, upgradation of railway stations, ports, roads, bullet train, steel industry, steel prices have again started firming up a little in the last 1.5, 2 months, if any one of you is tracking steel, which is very good news because steel prices going up means the demand is going up. More cranes will be required. So I think it is across sectors, wherever we operate, there is buoyancy.
All right. Thank you. That will be all.
Yeah.
Thank you. The next question is from the line of Vipin Taneja, an individual investor. Please go ahead.
Sir, just wanted to know, I think you mentioned a lot about exports. So what would be your $1 billion dream? Are we even thinking on those lines? Because 40-50% exports means the company is totally thinking differently altogether now. That's what my assumption is.
Last 6 months, 1 year, we started thinking differently. I didn't say that we will do 40-50% exports. I said that is also a possibility. So that's how efficiently we are able to create, upgrade our products and sell ourselves in those international markets. I think looking at the capabilities of our company and our ability to be very flexible with respect to whatever needs to be done for the end customer, this could be a reality. But obviously we can only put in efforts, right? So and we're doing that.
And currently what?
And just on answering that question, I would just like to add that, and certainly most parts of the world who are using machines from China wants to avoid that or doesn't want to do it and is looking for an alternative. So there is genuinely an opportunity to, do wonders. I mean, it can go anywhere.
All the best, sir, because I'm an interested party too.
Yeah.
For the company. So, and sir, coming on, what would be the equipment or the cranes which you are currently really bullish on, or maybe in terms of cranes, in terms of tonners, this is would be the most hot sector currently and going forward, maybe in the medium term, and on the equipment side as well, sir, construction CE equipment. Because in Buma Expo, I think Mr. Nitin Gadkari mentioned that the current the current size of the construction equipment industry, which is 50,000 crore, will be 1 lakh crore going forward in next 2 years. 31st December 2024, you mentioned. So both in construction equipment and cranes, what are the really you see you are bullish on in your current portfolio? Yes.
Within cranes, we do pick and carry cranes, which is our main product, one of our main products. Then tower cranes, where again we are market leaders. And yes, last 3-4 years we've been trying to enter into the bigger crane segment. BS3 to BS4 transition was an issue. I feel that I'm very bullish on pick and carry cranes. This is nothing. The numbers that are happening in the country, the way country is growing and things are happening, this will double, triple, maybe become 5-6 times in no time. That's my assessment. If I talk of tower cranes, which are primarily used for building construction, with per capita income increasing, with economy stabilizing, yes, presently the interest costs are going up, but sooner or later it will start to go down. There's already a boom in the housing sector already, real estate. So I'm very bullish on real estate. If you ask me that, these 50 cranes a month or 600 per year, which we intend to do from next year onwards, this capacity should get utilized within the next year, maybe even faster. The way things are, we're not able to deliver. So all across, now if you talk of bigger cranes, let's say 40-50 tons and bigger, where in the last 5-6 years our country has allowed China to capture the market. And Chinese have used only one tool, sell at ridiculous prices and offer 1 year credit to the end customer. That is the primary reason why a company like TIL has gone down under, Tractors India Limited.
Okay, they've gone down under, right.
More or less, they're under some restructuring or some takeover or something is happening. So, and the Chinese have captured that market. They're selling about 300-400 units every year. So we need to bring that back to the country.
Yeah, exactly.
That's why we're setting up this bigger crane factory. Not only to grow our company, but as a true patriot, to bring it back to the country. The Chinese have taken it. How can they? How is the government allowed them to? As a matter of fact, I've already started meeting some officials and the right people, even at the highest level. How have they allowed this to happen? And Tractors India Limited, sorry for I have become a little emotional now. Tractors India Limited was supplying to Indian Defence, Navy, Army, refineries, all high value, projects and sensitive things, and they've allowed it to go to docks. And they see, I'm sure this government sees, so things will happen very quickly. आप समझ रहे मैं क्या कह रहा हूँ? If they just want to turn off your refineries, they can. They expect that the Chinese planes will load missiles and components and things or pull out wreckage when there is a war happening. It will never happen.
So basically,
one of the oldest Indian companies which was doing 70-80 ton planes has been allowed to sink at the hand of Chinese. What they did to the mobile sector, I mean, cell phones, and what they're trying to do in the automotive sector, which they are being constrained already.
So they were the only one who were doing all these
Sorry
things.
to interrupt, Mr. Taneja.
Yeah, okay.
Sir, this was the last question that we could take.
Okay. And so we would be competing.
I'm so sorry, sir, Mr. Taneja.
Achha, that's okay. Okay. Yeah.
Thank you.
Please mail it to us. We'll answer. Yeah.
Ladies and gentlemen, due to time constraint, we may not have taken all questions. We thank you for your active participation. I now hand the conference over to the management for their closing comments.
Yes, thank you. We've had a very good quarter, and hopefully, quarter 4 seems to be in line to be even bigger, better, with margin expansion again on the anvil. And going forward, I would like to say that about 2 years back, we had projected that in 3 years, by FY24, we should be able to do a 2,500 crore turnover with about a 10% coming from exports. So I have a feeling that in FY24, we should exceed both of these targets, which we had set for ourselves, crossing 2,500 crore revenue, as well as our exports doing more than 10%. And with the profit margins further increasing and stabilizing on account of better utilization, on account of operating leverage. So and the country's overall scenario is pretty buoyant, even in the face of a global recessionary news everywhere. So I see that short-term prospects are good, medium-term are good, long-term are very good. With that, I just hope we are able to deliver as per the expectation of our investors. Thank you. Thanks a lot.
Thank you, everybody.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.